Hello traders, welcome back to the channel. This is Jonoy with Trading the Charts Pro, and this is one more session of Market Outlook where we break down the overall market to see and put our game plan together based on what we're seeing technically that is going to be happening in the market in the upcoming week. All right, so stay tuned. Let's jump right into it. Alright guys, we're going to start off with the S&P 500, and man, guys, I can tell you this market is just in full-fledged bull mode. Alright, when we look at everything, guys, the market is healthy. We talked about it last session. The S&P 500, guys, the market is trending. In a trending market, we are just using the moving averages as support. And the moment the moving averages get broken, then at that point we know that something has changed and we need to watch out. All right, so pulling up the E-mini S&P 500 March contract. In the last session, we talked a little bit about the uptrend. You know, I said I think at that time we had pulled down into the 10 and the 20, and the projection was if we are going to stay bullish, we need to hold this level, bounce, and as long as we do that, we will continue to move higher. So on Tuesday, when the market opened, guys, we popped up. On Wednesday, major breakout of what now has actually become a bull flag consolidation. Given that we have more information now, that's one thing about the trading, guys. The more information we get about a specific pattern, is the more we're able to navigate it and use it to make additional decisions that builds on what we previously had taught. All right, so now what we're looking at is we're still trending. We have just broken out of this bull flag, and now the market run up, and again we're right here. We're consolidating. So this is a good sign. We just gotta watch this, make sure we don't come back. If we come back down, we're gonna come back down into the 10 and the 20, and that is going to be the low risk level that we're looking to buy for the trend to continue moving higher. Yes, at some point this trend is going to be over, all right, but we cannot worry about what hasn't happened yet. What we have to do is take advantage of what is really going on. And how do we know when something has changed? Well, the moment we get a break and a close below the 10 and the 20 EMA, then the uptrend short term is over and the market is looking to pull back. Where is it going to pull back to? Well, we're going to pull back down and test the 50. But as everything is looking right now, the 50 is healthy, the 10 and the 20 still trending above each other, nice and smooth. So the only thing I can recommend is that don't buy stocks that are at a all-time high. There's going to be a lot of stocks that have already pulled back and come back to their support. Those are the ones that you want to be taking advantage of, so that when the market rolls, meaning the overall market pull back, you're in stuff that has already pulled back and is gradually moving back up, because we already know that there's always a bull market somewhere. You just have to do your due diligence to find it. All right, that's it. That's what it comes down to. So we're gonna jump on over to the Nasdaq. When we look at the Nasdaq is pretty much the same thing, guys. Market trending. We actually broke out above the uptrending resistance, which is nice. This thing is full-fledged. We pop up. Now we're consolidating a little bit. I'm anticipating that this thing, continue to push higher. How are we gonna know that something has changed? When we break and close below the 10 and the 20. Until then, there's nothing to do but continue to ride and enjoy the upside in this market. Don't be too greedy always remember to take some profit. All right, let's look at the Dow Jones Industrial, which is the E-mini future of the Dow. All right, so we talked about this one. We were in an uptrending ascending triangular pattern. Now we've broken out of that, and now here we are forming, you know, what looks like a bullish consolidation. But in order for us to go higher, we do need to break and completely take out this 31,146 level. If we're able to do that, then the market will continue to go higher. All right, because right now what we can see when we look at this is that this was the resistance while we're moving up, right? However, the market broke out right here, and if you look a little bit more in details, you can see that the market hasn't really broken down and closed back below this level that now has become support. So as long as that continues to happen, there is a potential that the market will actually break out of this and try to push up higher. When is it gonna stop? No one really knows. You just have to, you know, ride the stocks that have run up, pull back, and has a low risk opportunity for you to get in and play them. There's a lot of things continuously happening in the overall market that is keep pushing the market higher. So you cannot wait for an extreme pullback to get in and get a play in this market. You just have to find the things that have pulled back, or the stocks that have pulled back, and rotate along with the bigger guys. Because if you realize, there was a lot of stocks that was doing nothing, like the Amazon, the Netflix, Facebook. Some of those, they weren't doing anything for a period of time. However, those are the stocks that are actually pulling or pushing the market higher at this point, because investors continuously keep rotating, you know, from the stuff that have completely run up and jump into some of the stuff that hasn't, you know, run all that high as yet. All right, so we're gonna look at a couple stuff that we talked about last week, and I'm gonna bring in a few new stuff and show you, so you can add these to your watch list and take a shot at them, you know, when the time is right. So guys, we talk about this one. We did talk about the big channel we have here, ascending triangular pattern here somewhat, and then we broke out of that, right? And now what do we have? We did say the target is gonna be 291. We still like this, and we're still looking for it to hit the target. If you didn't catch it, you know, when we talk about it here, or you didn't catch it when we talk about it here, then it's absolutely too late for you to come in and try to buy this right now, because, you know, the stock can also pull back at this level, but there's just not a lot of meat left on the bone to try to chase it. All right, CRM, guys, we did talk about CRM already. However, when I first mentioned it, you know, it was somewhere inside this area. Stock pulled back down to the 200-day SMA, and we got the bounce, break above the 10, break above the 20. I'm looking to see, can we break above the 50? If we break above the 50 and also break above, you know, this 230 level, that is all clear signs that price action has the ability to come back up to 250. Now when we get to 250, we have to be 100% cautious or take the profits off the table, because we don't know if this thing is once and for all going to break this level and head back up to the 280, or we're going to continue to pull back down. My guess is we're going to break out and we're going to go higher, but for now that hasn't happened yet. So first we need to see the break above the 50 EMA, and then we can look to the upside. All right, next one, guys, you know, this one we talked about it last week. If you didn't catch the video last week, well, here it is. NEO was falling down, right? And we said the reason why we like this is because when stocks break out, they need to pull back into the support, which was all resistance, and that is 100%. I will stake something big on this, that I believe it, that is 100%. As long as it holds here, it is going to retrace and price is going to continue moving higher. All right, so we're higher. Well, if we take out the 65 level now I'm looking for this to get to $70. All right, so that's the play. I hope you saw it on Friday and got in. Got in on Friday. Take advantage of it and move with it to the upside. All right, guys. Next one I want to bring up to your attention is Workday. I like Workday simply because I see the pattern. Nice uptrend, stock pull back again, and I see the pattern. All right. So if you didn't see this roughly Friday, do I still like it all the way up here? Well, you have to ask yourself the question, do I like the risk at this level, especially when the market opens on Monday? However, I've been waiting to see this thing break 230. It has officially broken 230. So, I'm in this. I'm looking to see this thing run up to 244. And if it's strong enough, try to come back up here to 257. All right, so I like it. There's one thing I didn't look at. I didn't check when earnings is coming out. That is one thing that can completely offset or ruin the pattern. So we have to check into that information before you ever take a trade on Workday. All right, one more, guys. I don't know if I mentioned this one last week, but I like this. I already took some of the profit on this play on Friday because I see we're having just a hard time breaking the retracement level right here at 56, 57. We're having a hard time breaking out. So I took half the position off the table and I'm still holding half of the position because if we can break out of this level, I see us running back up to 67 and potentially this $72 level, right? So I do like this right here. If you are not currently in this play already, I'd probably wait for it to break out of this resistance level and then try to catch some of the momentum above 59 to the upside. All right, I like that. Keep it tight to the watch list. And guys, I hope you find some value inside this video. If you do, I look forward to catch you on the next one. Thank you for watching.